It's always a spine-tingling moment when you hear recording in progress.
You still get nervous, Rob? You still get tingly?
I do. I do.
And where are you this week? You like the outdoor themed settings, I'm noticing.
Well, the outdoor theme setting is not without peril because the lighting keeps shifting. I'm actually in Golden Gate Park, having just flown in from Chicago, and the fog, wisps of fog, keep going over the sun. So sometimes it's bright, sometimes it's not. But Golden Gate Park, if you've never been, it's probably not a place that many tourists go right away, but it's very nice. It's right up there with Central Park in Manhattan and so on. And it's very nice.
Okay. Little choppy on the audio. But it looks like it got worked out.
I'm gonna mute you while you talk.
Mute me while I talk. A lot of the fans would probably like that. But so happy Friday, everyone. Rich Swerbinsky with the Mortgage Collaborative here with the rundown with Rob and Rich, where we take you into the weekend by running through the week that was in the always wild and crazy mortgage industry. And as always, pleased to be joined by my esteemed colleague and co-host, Rob Chrisman. Rob, good to see you. And thanks again for the lovely on location setting. Yeah, you always provide our live viewers, our podcast listeners. Got to do a better job mentioning this at the beginning. Join our live sessions. They're Friday at 3 p.m. Go to mortgagecollaborative.com to get signed up. And this week, very pleased, a special co-host this week, our good friend, Senior Director of Business Development for Matic, a good partner of TMC, Tony Farnsworth. Tony, it's great to see you, bud.
It's nice to be here, guys. Thanks for the invite.
Those that don't know Matic, they're an embedded homeowners insurance marketplace that is really innovative way for our members to make a little bit of extra do-re-mi and provide a better customer experience. And I remember meeting your CEO, Ben Matic, way back, like early days at TMC. He was really involved with MQMR at the time, was just starting this Matic idea that he was really, really passionate about. Just watching it come to fruition, watching it come into the network, and then watching members have great experiences with it. It's been like the full life cycle I've got to see with Ben and yourself and others. So congrats on the success, and excited to get into some conversation on mortgage tech and mortgage software, because you have a decorated background in that, Tony.
Yeah, well, thank you. Yeah, it's been a lot of fun. I've been in the mortgage business since getting out of college, back when I was writing loans along with other financial products, and had the opportunity to a little bit later in my career, spend some time at Total Expert, helping lead the sales team over there. So, looked at Matic and saw what Ben was doing, got pretty excited about that. Hans Haseman, who spent years in Citi's mortgage business, also at Total Expert, is along here for the ride with us. So we're super excited about it.
You got a great product, but you got great people that are known quantities too to our network. It's just been the ultimate success story. We got Matic linked in the chat for people that want to learn more about what they're doing, and looking forward to the conversation. So let's go ahead and get into it. So Rob, all kinds of stuff going on this week. I see your hands up. Yeah, you want
Rich.
to check? Okay.
Sorry.
No, yeah. Go ahead.
Not that I ever want to interrupt the master, but I can't help but admire. Is it the volume enhancing conditioner that you're using? Is it Prel? I mean, what is going on with the hairline?
Everybody thought I was bald, and I'm just letting it grow. I am at the point now where I kind of got to do something with it. It's getting kind of crazy. So, the home maintenance of it, I'm probably outlasted that. So I don't know what's going on with it, to be honest with you. But
and you've taken down your Christmas.
The Christmas decorations are gone. Yeah, as promised. So I'm evolving. I'm evolving as a human every day. So, but all right. So this week, a lot of stuff going on. You get the bond market trying to make sense of this crazy good jobs number from last Friday, what it means for inflation, what it means for interest rates. Anthony Shee getting booted off the Loan Depot board. Matt Ishbia acquires Kevin Durant. M&A rampant. We got the Super Bowl, the chat's flying already. Where are we taking this thing to start this week, Rob?
Well, let's put the Kevin Durant thing to bed. As was pointed out to me by my son, Kevin Durant has not had Kevin Durant is not by himself the great player that people think he is, supposedly, and that he does best when surrounded by, other superstars. There's no I in team, as they say, but still he's a good player, and still it's gonna change the dynamic in the western area. So, hats off to Matt Ishbia for like a big trade. So good for him.
Excellent. The bond market, Loan Depot, anything else in there? You got any thoughts on?
Anthony Shea, I know him a little bit. I could send him a text or shoot him an email. He's temperamental. I don't know. It's almost old news at this point. Loan Depot is kind of headed in a different direction versus when he was manning the shop, and mercurial. You heard that term? Volatile management style. Some people, I think, flourished under, others did not, and so he's off in his fishing fleet, doing his thing. I wish him the best. But I'm returning to Matic because I'm fascinated. I mean, there's a lot of news we can talk about, and we're going to keep talking about Matic. But Tony, I wanted to ask you. You meet somebody in an elevator and they ask what Matic does. What is your 3 or 4 sentence elevator speech about what it does? Because to me, it seems fascinating. It seems like a no-brainer for lenders to say, wait a minute, my loan officers can make more money and they hardly have to do anything. Why wouldn't they want to do that? So can you give us a 3 or 4 sentence summary of Matic?
Yeah, I mean, if you really think about it, I always kind of look at, what problem we're trying to solve for. And you think about, just mortgage has gone digital in general with point of sales coming through and a lot of different technologies coming through. Condition to close a loan is insurance. It's one of the industries that has not evolved at all, right? And so, we kind of looked at the problem from them having to find agents to having limited carrier options to processors having to chase down documentation, some of those types of things. And we just figured out a way to build a marketplace to be able to provide 45 different companies quotes real time with actionable data that they could buy a policy, and we send the documentation and approvals over to the lender so that the customer has a better experience. Ultimately, the processing team has a better experience. And to your point, it is an enterprise software. So, we do have the ability to structure an opportunity with these lenders to have a little extra cashish at the end of the month.
Cashish as opposed to hashish. We won't go. Rich will fly off the handle at that. We need to rein it back in. So, I would put insurance up in, like when you mentioned going to the DMV for a driver's license, or I've got to go to the post office for whatever. There are some things that make people's skin crawl a little bit. One of which is dealing with insurance, and especially certain parts of the nation, Florida, Louisiana, California, given the wildfires, earthquakes, and so forth. Insurance can be a real nightmare. So what is it that when you're talking to loan officers, what is it that you're telling them, where they fit into that insurance pie?
Yeah, so traditionally what we do is we actually work with a lot of the enterprises, right? So we kind of start at the top of the organization because there are integrations and some of those types of things that we put in place to automate the process for them. So, think about it from the standpoint of, a loan gets in the process with intent to proceed. We can fire off automated communications infused with the customer's data. So literally they just have to click a button, can get their insurance quote. They can bind coverage online, not even have to talk to somebody, or they can talk to over one of our 100 agents, either in Columbus, Ohio or Phoenix, Arizona, and get that policy done. So, the ultimate benefit to the loan officer in general is, it's going to help them, not only push the process through faster, it's going to save their processors time so they can work on files more and just move these loans through the system quicker. So it's a huge opportunity, like I said, for the consumer to win, and the loan officers and ultimately the lenders too.
So do you deal with, well, first of all, how big is Matic? How many full-time employees do you have?
Yeah. So we have about 300 employees, and we've gone through a few different fundraisers over the years.
Right. Congratulations on that. And
Thank
then
you.
do you also deal with other industries besides mortgage?
So we have a couple different partners that outside of industries, but the majority of our partnerships are either with lenders and or servicers.
Super Bowl ad for Matic Sunday? No,
We don't go direct to consumer. We don't go direct to
Yeah,
consumer.
sure, yeah, you're
So
B2B,
we
yeah.
won't have a Super Bowl ad, but we only work with partners. That's everything I do. That's our go-to-market strategy, and it's worked out pretty good so far.
About
Rich.
about 3 mil for 30 seconds around kickoff, just to show how much things have changed. Remember a year ago, the Super Bowl, crypto and mortgage commercials. I don't think you're going to see many of those this year.
No.
Well, I think I think people, especially members of the Mortgage Collaborative, should be watching those ads to see where their Mortgage Collaborative dues are going, because I think the rumor is that TMC has an ad involving a Clydesdale, which brings up a whole nother topic. Have you guys heard about this controversy, or somebody sent me a story about Clydesdales being mistreated by Budweiser? Have you guys heard this?
Somehow I missed it. Yeah, emerging story. Yeah, I don't know.
Well, anyway, we digress. We digress.
So yeah, Super Bowl ads about 3 mil around kickoff for 30 seconds, and always interesting to see which companies are throwing all in. We remember, it was the Rocket Mortgage push button get mortgage that really started the digital era in the mortgage industry. It was that Super Bowl ad that changed everything. Really was the catalyst.
It was a masterful ad, because Rocket didn't necessarily have any technology that every other lender doesn't have, right? They were able to put it out there to the public, though, and suddenly every borrower contacting every lender said, well, it's supposed to be this easy. Why isn't it this easy with you? So
a lot of Super Bowl chat and predictions in the chat. My official prediction, Eagles 30-27, just a little too good in the trenches, a little too good at AJ Brown and Devontae Smith, maybe the difference. I'm gonna lean Philly. So any Super Bowl thoughts or predictions, Tony, and then Rob?
So we just were talking about this last night with my kids. I have a 14-year, 11-year-old. My son's starting to get heavier into football, playing fantasy, doing that stuff. I told him I'm going Chiefs. My daughter picks Chiefs. The other two are Eagles all the way. So we have a split house here.
Rob, what's your official show prediction?
Kansas City.
KC. Yeah, I would like to see. I have no ill will for either team, and I'd like them both. Hopefully we get a good game and a good ending. So
is the show over already, Rich? This is usually the end of the show conversation. I'm not done talking about Matic.
No, there's been a lot of Super Bowl chatter in the chat. So
that shows where people.
Every time I try to go to a real topic, you dodge my question. So
I'm perfectly happy to talk about. What would you like to talk about? Interest rates,
interest rate,
employment?
predict mortgage rates for the rest of the year, if you could, real quick. There, Mr. Habib. I'm
sorry, you cut out there. Some go-kart was going by. What was that?
I said predict mortgage rates for the rest of the year. That's
mortgage rates.
What people really want.
More of the same.
More of the same. So
there's like a bomber flying overhead. I'm sorry. So yeah, let's talk a little bit about the economy. Then we'll come back to Matic. The news continues to be very good with regard to the economy. A soft landing, if at all. But as we've talked about, every bit of news that comes out, somebody comes in and says, "Well, wait a minute. Next month we're going to see this, and next week we're going to see that." And it's always very forward-looking in terms of the news that keeps coming in. It's been like that since day one. But I made the comment today or yesterday that rates aren't going to go down, so they're going to go up, and we've seen a little bit of that. And some of the action recently was attributed to a poor 30-year bond auction, because everything's supply and demand driven. But in general, I could see us just chopping around here into the summer, maybe go a little bit lower, but really, I mean, given the strong employment number, and numbers that we continue to receive and decent inflation and so forth, it's it's not very recessionary. And so the Fed has made it clear. I don't know how much more clear they can make it that inflation is not under control from their vantage point, and they're all primed to raise short-term rates, another 50 basis points at their next meeting. No question.
Well,
So,
Tony, I want to get your thoughts, just the general fluctuation in rates this last year, how it's affected the homeowners insurance part of our business. But I think, Rob, it's like the market is like the Fed has to say that, right? So if the market is basically just saying like the Fed is saying what they have to say, and then they're kind of making their own judgment right now is kind of what's going. I mean, nobody really believe, the where the markets are at would indicate that the markets don't believe Powell's rhetoric 100%, right? I mean,
he's not, but he's he's not out. He's not in that post to lie to the public and lie to the investor community. He's not there.
Lie is a strong word, but I think
there's
certain things he has to say and he can't come out and say, "Oh my God, freaking, we're so happy with what's going on with inflation. It's awesome. Like we think we got this." I mean, that's probably maybe what he's thinking a little. No.
He goes home and sits in front of the fireplace.
I think so.
He's
got to give all these canned speeches, and every word is manufactured. He probably goes home to his wife. And it's like, we are killing this inflation thing. We're just slaying it.
Hats off to me.
At the bar, at happy hour, he's telling all the other Fed economists he hangs out with, they're bragging, they're doing shots. No?
Beating their chest in the locker room. Yeah, I don't know what goes on behind closed doors in the Federal Reserve, Rich, but things aren't going so bad. Things are going okay. But getting back to Matic, Tony, do you sense in Matic's business channel, do you see fluctuations in business? Rich and I talk, or I do at least. I'm out here talking about airport parking lots and restaurants being crowded as a gauge of the economy. But do you see through your business flow do you get a sense of economic cycles, or is the company too new to see anything like that yet?
So we actually have, what's interesting about Matic, we work with quite a few significant lenders and servicers, Coopers, the Freedoms, companies like that. And so we have all, the data coming through our system and running quotes and so on and so forth. I was going to joke around. I can always tell, if we're in a recession or not by the airport parking lot for sure. And based on the Minneapolis one, we're definitely not in a recession. But, I think what's interesting is, if you look at insurance rates, and I'm sure any of you that are homeowners experience this over the last, year or so, especially, we've seen rates significantly increasing on the homeowners insurance side of things. Multitude of reasons for that, whether it be insurance regulators across the country during COVID, not allowing for, rate increases. And then, of course, you have building costs when disasters do happen, that need to be replaced. So, carriers are kind of in this position right now where, this year and probably, a little bit going forward, you're going to see significant increases in rates, which, for servicers especially, and, originators in the DTI world kind of fall into this too. It just kind of leads to the more important reason why you need to have multiple carrier options for your customers to not only retain them, but if you are going through an origination, to be able to get them qualified.
And Tony, something else that came up recently, CFPB came out with a statement essentially putting, mortgage comparison sites on notice, the RESPA tentacles to that. That is like a world you guys dabble in. And I know one of the many great things about you guys is you provide a compliant solution and another offering. So a borrower could never say I was steered into this homeowner's product, but I wanted to get your thoughts on that recent news development as well.
Yeah, it's interesting. I've spent, my time at Total Expert. We obviously had some RESPA implications that we need to focus on there that the team did a fantastic job with. Coming into Matic, not much different. I've spent more hours on calls with external counsel about RESPA and making sure that, we're setting up a compliant program. But yeah, no, to your point, there's a lot of lenders right now, especially that are looking for additional ways to drive a customer experience and revenue. And so they're looking at things like insurance. And the problem is if people don't understand mortgage, they don't understand the laws and regulations around it, they don't understand RESPA, it could put them in a somewhat of a bad situation. There's an insurance company out there today, an insurance carrier that's kind of gone after, partnering with mortgage companies. The biggest problem there is when they offer insurance, they're offering their own insurance first. And then if you don't, qualify there, they're offering a couple other, potential partners. And so when I saw that note come out, the warning shot from the CFPB on this, for us, it really made a lot of sense because we've been preaching this forever. And we're just hoping that, people truly, if they're going to look at a program like this, that they truly, work with an experienced company.
We're in this kind of climate too, where, it's going to be mostly purchase. It's going to be very competitive. I mean, anybody that's been in this, how the cycles go, right? I mean, there is going to be, we've had very little focus on RESPA the last 5 or 6 years. If you're a lender and you're not really focused on making sure everything you are doing is 100% RESPA compliant, that would be a mistake in my mind. So this is the rundown with Rob and Rich. I'm Rich Swerbinski with the Mortgage Collaborative, joined as always by Rob Krisman. And this week, really happy to have the Senior Director of Business Development for Matic, Tony Farnsworth. Rob, your hand is up.
Well, so Tony, you get a call. I think it's important for viewers and listeners to understand how it actually works. You receive a phone call from, let's say, from Rich, who runs Rich and Rob's Mortgage. And we've got, 50 loan officers, a couple different branches, a couple different states. And we're doing, a fair chunk of purchase business and we're looking to improve our bottom line. So you get a phone call from Rich, and Rich says, "Hey, I looked at your site. I understand the basics of Matic. What are the steps that you have to go through, or that Rich, who's in charge of Rich and Rob's Mortgage, go through to bring Matic on board?"
Yeah, so a great question. So essentially everything that we do with our partners is really kind of a co-branded focus to their customers, right? And so, traditionally we would set up, just a typical agreement, could be an MSA or something to that effect, depending on the organization. And either number one, we'll, look at partnerships where we can pay for, services as they're going through to help advertise and market, Matic inside the ecosystem that they live in. Or, it could go down the pathway of doing a typical, revenue share. We don't do anything around JVs for a number of reasons, which we can get deeper into maybe at another time. But setting up type partnership where there is a revenue share on ultimately commissions made long term on policies written. So again, going into that conversation is quite deep, and there's a lot of nuance to it. But the core of it is essentially we can set up a partnership with mostly rev share from that aspect. And then, in insurance, it's not an upfront, payment like typical maybe mortgage would be. And so, there is a residual component to it, which is, quite attractive for doing the right thing for the consumer.
Very interesting. The other news we didn't bring up that is, Rocket agreeing to pay the legal bills of any of the UWM lawsuit people. Rob, your thoughts on that? I know you're a big Matt Ishbia fan, so. I think you're on mute. Yeah.
Volume's impacting everybody. For Rocket to do that, I think is I've heard from the folks at United Wholesale, and it's like, gee, Rocket's dying on the vine. They're withering, and they're doing these last ditch efforts to try to keep their volume up. I'm not so sure that's really the case, but it is, since day one, that has been, and not day one certainty, but by Fannie Mae, but ever since that got rolled out, it was, it's been challenged. People are grumbling about it. Brokers are upset about it. I know that when Matt Ishbia's purchase of the Phoenix Suns was going through, the fans there were thinking that they would be able to attend Phoenix Suns games only and not be able to attend basketball games in other stadiums. I don't know how founded in truth that is, but for Rocket to do that, good for them. They've got some pretty deep pockets. Dan Gilbert's a savvy business person. I don't know how much he was behind that plan, but it certainly gives comfort, I would think, to brokers, because they do want the choice. They do want to be able to sell to United Wholesale or broker to Fairway or Rocket or whoever. I think it's big boys playing with their toys, right? They've got some cash to spend, so why not make a splash with it?
Tony, any thoughts?
It's funny. I've been watching this over the recent years that a lot of this has transpired. And when I first saw UWM come out kind of with that ultimatum, I was a little blown away. So I've been sitting here watching with like a bucket of popcorn and just kind of throwing it in as it goes. But I agree with Rob. I mean, it's big boys playing with their toys, and it'll be interesting to see what happens. I love to see the competition. I think it drives a lot of innovation and enthusiasm around the industry in itself. But I guess only time will tell. It'll be interesting.
I got no dog in the fight. Rocket's business model far more diversified. Oh my God, UWM wouldn't surprise me if they're out of business in 3 years. I hate to say it, but.
So, Rich, did you hear from the TMC lender members about what was the chatter in the ranks about that?
I think there's an element of our IMB owners that that feel like the biggest IMBs maybe don't paint the greatest light, and maybe that's I think there's I don't disagree with that, honestly. But I think they mostly just kind of watch the broker side of our industry with some amusement, and it's like Tony said, fun popcorn eating material. But my experience with the broker side of the industry is like every time they start to gain market share, it kind of like self implodes on itself and goes back down to like 8-9%. But that's just been history. We'll see what happens. And I mean, again, the whole premise of the broker model is choice and options and low cost to the borrower. So when you start saying you can't do business with them, it just you're completely ruining the whole premise of that channel and what makes it what has made it attractive. So, but
yeah, I want to ask Tony. There are some third party providers out there.
Okay, here you're on.
Can't hear me?
Now we can.
Okay, I want to ask Tony about user groups, because there are some third-party providers who do user groups or encourage communication between your clients, and they are able to use the data that they are obtaining from their clients, not in a bad way, but in a good way, to help those clients and help encourage, like, hey, have you thought about doing things this way or that way? Or we have a client doing things this way. Do you share information? Because you see this kind of insurance information across a wide variety of enterprises, do you use that information to help existing clients?
So we do. It's interesting. I always joke with people that I talk to now is we've had 8-9 years worth of trying to figure out what works and what doesn't, and we're constantly testing different things. So the benefit of lender partners and services that are signing up today, ultimately with somebody like Matic, is, they have years of learnings, and so can drop into a program that we know works and is effective from that aspect. So, I think, we did the same thing back at other companies I've used. I think user groups are probably one of the best things. It creates such an awesome community and really elevates the game all around. So, we have it. I know other companies do too. And I would encourage everybody to, that's in the vendor space, at least, to make sure that they're sharing best practices.
Do you have a competitor?
We do. We don't mention their names, but no.
Okay. All right. Never mind.
We do.
Forget I asked.
No, it's a great question, because we actually do have some people that are, trying to get in the space, or they were in auto and they thought they'd get into home, some of those types of things. The reality is there's nobody in this space that has more experience and the technology side of things with the API connections we have to carriers than Matic does. So, you can choose a different partner to try it out and see what happens. But again, we've been doing this a long time. We have a ton of data. We know what works. We know what doesn't. We structured it the right way. And usually when we look at us compared to a bunch of other folks, we've gone through RFPs and some of those types of things with some pretty large organizations. Matic has come out on top. So
any lenders that that residual income stream on homeowners can be pretty compelling. You get that thing going over time. I know it's helped a lot of our members through this year having that. And any lenders right now that aren't looking at every rock they can turn over to find a little extra juice, probably short-sighted. So apropos time to take a look at things like this. And there's a link in the chat. You could book a demo, just one click in the chat with Matic if you want to see a little bit more what they're doing, how they're helping our members, and what they're doing for the industry, and how it can help your organization's bottom line a little bit. So Rob, getting back into the news, this Chat GPT thing, have you messed around with this at all? It's starting to make some waves in our industry. Is this anything on your radar?
The what thing is making waves?
I heard this is how you're writing your column in the morning now. You're asking Chat GPT a question and it pumps it out and you just send it out on email. Chat GPT, you haven't heard of this? This AI tool is really popular that you can know. All right, okay. It's maybe that they're not talking about that in the airport.
Tony, help me out here. Do you know what he's talking about?
Yes, I do. I do know what he's talking about. I've tried it. I've used it, and it's a really interesting technology when it works. Right. I know they got slammed about a month ago when it first kind of rolled out, and it's an interesting piece of technology. I found it to be good, not great. And it hasn't really, I've never really used it for anything in terms of communications outside of just playing with it, but I could definitely see how it could definitely change the game.
What game is it changing? I don't.
So for example, I just heard Gary Vaynerchuk do a piece on this, how like you can use this for LinkedIn. It's genius. So if
LinkedIn, is that social media?
It is, yeah. So if you're in LO and say Tampa, Florida, you can ask Chat GPT, hey, can you explain to me trends in the local real estate market in Tampa Bay, Florida? And it will produce like immediately, like a pretty well laid out, account of, something that you can make some slight modifications to, use it as content on LinkedIn or another platform. And hearing Gary V talk about this, and like he's so ahead of the game. I think you're going to see that. CNN just did a piece on how real estate agents are using it to send out information about listings, to send out replies on listings. So something to just put on your radar.
That would be exciting if they had any listings to talk about.
Right. Well, one day maybe. No,
right.
But, what about Rob? There was a new change at the head of the Bank of Japan. Were you consulted on that? Did you help select Kazuro Ueda as the new head of the Japan?
I'm impressed. So, Tony, just so you know, Rich always stumbles over Japanese names, and the fact that he was able just to let that one.
I was like a George Bush. Like I worked on that pronunciation for 15 minutes before the show.
It was pretty good, Rich. Not bad.
Yeah. I used to love Bush when I'm not getting political, but it was just funny to me, like, the names of the leaders, and Biden, totally different, funny now. But the names of the leaders, like during the terrorism thing, when he was trying to pronounce them was funny.
So Japan is an interesting place. Obviously, I've never actually been, but look at the Japanese economy. If you look at the Japanese population, it's not the powerhouse that a lot of people think, and the population's been aging and declining. And so it's not, like I said, it's not the world power. The Bank of Japan, it's obviously a good ally, and they have some very sound fiscal policies, but I don't think it's quite the big deal as you say, certainly the United States, or what's going on in China or Germany or the UK in terms of central bank activity. But I think that it's a good choice from what I've heard. I've heard a little bit, and obviously he's qualified. So yeah.
A lot of stuff in the chat, a lot of chat. Evidently, Rob, you're the only one that doesn't know what Chat GPT is, because there's a lot of chatter in the chat about it, about how people are using it. Some stuff in the chat about the delivery fees. We haven't talked about those, but that has been probably the topic of the last couple of weeks for our lender members. Tony, any thoughts on some of the changes we saw with the delivery fees with the GSEs these last few weeks here?
Yeah, no, I don't. That's outside my wheelhouse. I'll let Rob handle that one.
Rob, any refreshed thoughts on the delivery fee increases?
We talked about it last week, I think, or perhaps the week before. You know, the quickest way to impact the business channel, a business line, a product, anything is through price. You know, if you're the one of two gas stations in town and you want to take a day off, you just jack your price up and you won't get any business. It's as simple as that. And so the GSEs, in terms of delivery fees, they have, you know, circles back to what I was asking Tony about in terms of using data. And there are organizations out there, especially industry-wide organizations like TMC, Fannie Mae, Freddie Mac, MERS, you know, whoever it is that has access to different lenders and different organizations' data, and they can slice and dice that and come up with some really interesting products and some really nifty things. And so if you look at the trillions of dollars that have flowed through Fannie Mae and Freddie Mac over the last several decades, trillions and trillions, they have a huge database. And you have to figure out, you have to understand that when they tweak something or make a decision, they know the implications. Now, Rich, I sent that letter to you that I sent a note to Sandra Thompson, not that it does any good whatsoever, but there's some problems with regard to the recent loan level price adjustment changes that impact a fair segment of our borrowers. And I know that the MBA, in fact, I was writing it up for tomorrow's commentary, the MBA sent her a letter echoing that or reiterating that, discussing things like, gee, we're getting into the spring buying season. You know, why do you want to make these changes now that will have a negative impact on a certain segment of the borrowers that are out there when we're trying to promote, home ownership and first-time home buyers and so forth. So I think, even though I'm sure Fannie Mae and Freddie Mac and the FHA did a lot of number crunching ahead of these changes, I think that I think that the three of them may change. But what do I know? I'm just standing here in Golden Gate Park watching women joggers go by.
I think you may be right. I mean, with Sandra's coming to our conference in a few weeks, so we've been going back and forth with her and her people just on questions. And I honestly, we put some questions in there for her, and other industry leaders would say, hey, take those out, and none of that. So I think you could maybe see it tweaked or changed before the May 1 implementation.
Rich, do you reimburse her for flying private, or do you tell her she has to go Southwest coach and bump her up to A-list preferred?
Well, government employees, you can't pay anything, unlike you, we have to, tens of thousands of dollars, the red carpet, the limos at the airport. With Sandra, she just shows up. We don't got to pay for anything.
I'm glad I don't work for the government.
Oh, too funny. This is the Rundown with Rob and Rich Swerbinsky with the Mortgage Collaborative, joined as always by Rob Chrisman. This week, the Senior Director of Business Development for Matic, Tony Farnsworth. Got about 5-10 minutes left. Tony, mortgage technology in general, how would you assess the state of mortgage tech as a whole as we're in the early part of 2023 year?
Yeah, I think I think everybody kind of sees it across the board. Mortgage companies have been, struggling a little bit over the last, 6 to 8 months. Technology companies are kind of feeling the same heat a little bit. There's been some rifts across the industry that I've heard. Some really good people out there looking for new opportunities to really grow. What I would say, though, as talking to some of the CEOs of some of these great companies out there, as excited as they've been in the past, they're more excited now. I think there's a lot of innovation that they're working on. I think they're trying to figure out, how do you drive ultimately just overall better customer experience? How do you streamline the flow of originating, and manufacturing loans. How do you provide a better service level to, servicing customers, and how can that technology help do that? I think the GPT thing that we were just talking about before, I wouldn't be surprised if you start to see that start seeping into more and more technology, helping, loan officers, real estate agents, helping everybody around the financial industry be able to provide a better, like I said, overall experience to these customers, including banks and credit unions are really focused on it too.
Absolutely. Yeah, no question about it. And just AI in general, it's emerging. I think it probably is not where we thought it would be at this point. But you're now starting to see it seep into really all industries, ours included. You get to the end of the year and you come into a new year, you get to a lot of these like prediction columns and podcasts and pieces where people are predicting emerging trends that you'll see throughout the course of the calendar year that we're just going into. And artificial intelligence, not that it's a new thing, but the mainstream adoption of it, like we're starting to see with Chat GPT and others, a big trend for this year. So Tony, any other trends on mortgage tech specifically maybe that you see emerging this year, maybe even in future years?
I think I wouldn't say anything specific that's not, already out there in the marketplace. Like I said, I think, I think just overall AI and how you communicate with your customers, I think customer retention is more important than ever, right? And so companies are trying to utilize different technologies out there to be able to meet the intersection of where that customer sits and the offerings that they have. So I'll give you an example, like at Matic, when we work with, some of our servicers, we'll actually, take the data that's sitting there and we'll be able to run it through our proprietary quoting engine and compare that against the current insurance they have, right? And so by doing that, we'll be able to create an offer for that customer, for you, Rich, that says, hey, Rich, you're paying X amount of money now. With the new quote, you can pay, $600 a year less than what you're spending right now. And using that around the time of things like escrow analysis, using it for pre-expiration, post-expiration. So, really it's just about, a lot of companies are trying to figure out, how do you take your whole tech stack and make it communicate with each other and integrate with each other so there's no silos and or gaps. And then how do you take that and make it actionable, right? To actually deliver to the consumer the right offer at the right time in the right place, right? And so from what I'm talking to a lot of folks out there, that's a big thing that they're working on right now and trying to go deeper on.
Good stuff, Tony. Rob, last story I wanted to touch on, something that is a growing concern to me just for housing in America, the construction part of the business, starting to be a lot more demand for new homes to be built for all the obvious reasons and things that suppressed that last year. And story that came out yesterday, just talking about the lack of workers in the construction industry in America, the impact that some of the immigration crackdown changes we had over the last decade have probably had more impact on that industry than any other. The numbers cited in this column was that the construction industry currently is about 550,000 workers short of what they need just to keep up with demand. And 1 of every 4 construction workers in America is over 55 years old. So this is something, just as we talk about inventory and needing to create new housing stock and more affordable housing stock in America, it just seems like this is getting to the point where it's something that's got to be done at some point, most likely. I know you're a free market guy and everything will work it out, but
yeah, it's a huge problem. And I'm not going to pin the blame on any particular administration or any particular time period, but briefly touching back on Japan, in an aging population, it's tough to find, unskilled workers to do anything. In this country, yeah, we've got an aging population. Traditionally, a lot of immigrants have gone into the construction trades. Obviously, it's lacking. And when you just try to get somebody who is, a painter or a remodeler or some tradespeople, it's very, very difficult. The price keeps going up, and at some point, it'll make economic sense for people to go into that. But if you're a a 17-year-old high school kid getting ready to graduate, and you want to go, do something, usually, well, I'm going to go, learn how to code, or I'm going to go to college. And then they go to college. I'm not saying that's a bad thing, not by any stretch of the imagination, but there is this perceived economic benefit, obviously, of going to college. Whereas if you become a tradesman, if you become a plumber or a carpenter or a mason, and I'll tell you, if you have a decent product and show up on time to give bids and give competitive bids and handle your work in a professional manner, I mean, you could make a tremendous amount of money. And so,
especially like 5 years from now, when the supply demand, right? Because people aren't going into plumbing, right? So if you need a plumber today or 5 years from now, in theory, plumbers should be making a lot more money.
I think they will. I mean, they already make. I mean, gee, I don't know how much plumbers make. I think they do pretty well. But yeah, it's a supply and demand thing where if the money's there, people will go there. But it is
the whole butt crack stereotype they've been able to overcome. Some remarkable. So
yeah.
Tony, I'm looking for 4 weeks TMC San Diego. Looking forward to seeing you and the entire Matic team out there in sunny San Diego in a few weeks. And any other thoughts to take us into the weekend? Bring it home here.
Yeah, no, we're excited about the conference coming up in San Diego. Like I said, I've been there a couple of times already this year, and it is a fantastic place. So I'm looking forward to it. And myself and Hans Hazeman, we'll also have Maria Taft, who's our director of business development strategy, will be there also. We're going to be a part of the Lightning Showcase. So we're excited and ready to have some fun. So all the folks on the call and the lender members that are going to be there, we look forward to seeing everybody there. We'd love to spend some time talking a little bit about what a partnership might look like. So
it's one of the meetings you want to take to our members that'll be there, because it's the way you can make a little bit extra money, and it's a great product. So, and 3 weeks, not 4. Amy, our events director, corrected me. So Rob, any thoughts to take us into the weekend on maybe my new Hank Aaron or Willie Mays cards, or the fact that Steph Curry is now a not my backyard guy, or any the Warriors lack of action at the deadline, giving up on James Wiseman? Anything you got there for us?
Have your sweaty little palms been cupping those cards for the whole show, just waiting to flash them up there?
I got a Mickey Mantle I picked up there, old, little beat up. Jim Brown, old school, 60s.
Old school. So on the plane ride over, I back to the West Coast, I watched I guess it's a new documentary on Willie Mays. Thumbs up, Rich. You would enjoy.
I'll have to check that out. I love documentaries, especially.
Yeah, it's all about Willie Mays, and I met Willie Mays, but that's a story for a different show. Actually, quick. I mean, we've lost half the audience already, right? But I'd heard that if you go to Willie Mays' house, this is years ago, he will give you like a signed baseball. He'll give you stuff. And so I took Robbie and some of his buddies down south of San Francisco, a very nice area, and I knew his address. And so sure enough, we walked up and there's Willie Mays handing out stuff at his door.
Oh, so that's so cool.
It's very cool. Very cool. So anyway, there's my Willie Mays story.
Very cool.
But,
well, as always, thank you very much to our attendees for joining us on the live stream, podcast, YouTube, Apple, Spotify. Find us in all those places. Search TMC Connect. And big thanks to Tony Farnsworth, our good friends at Matic Insurance, for being part of the show today and spreading some knowledge on the network. Tony, as always great to chat with you on the industry. Really appreciate you being on the show today.
Yeah, I appreciate the invite.
Absolutely. Thank you very much.
Awesome. Thank you, guys.
Everybody enjoy the Super Bowl. 30-27 Eagles. I'm planting my flag on. I know Mike Hano will love that. So fly, Eagles, fly. And we'll see y'all next Friday.